Today in the grain market, soybeans were a little bit mixed. They really started lower and then started to move somewhat higher. There's uncertainty ahead of this agriculture outlook forum coming up on Friday, I think, or on Thursday. Plus the US dollar index is really at an extreme high. So that really is going to cap like any kind of markets moving higher, but there is the promise of that China is going to start to fulfill some of the obligations from the phase one signing that was really supposed to start over the weekend. Now, no one expected the coronavirus to jump in and have that be part of the mix and make things just much more difficult. But I think that it looks like we're going to have a little more consolidation in that soybeans market until we get more news that will give us some direction. We're going to watch closely, though. I think it's going to be a day by day right now. Everyone is kind of on the sidelines awaiting that first purchase out of China that will then give us an idea about what the strength of these markets are going to do going forward. Now, corn was a little bit lower. That overflow from that wheat surge did come to an end, and the market was a little bit lower. I think the inspection total was also below the forecast number, but it seems that the futures are still in that consolidative channel, and they have been in that same channel for about 4 weeks now. So it just looks like we're having a Groundhog Day over and over each day. But South America also doesn't offer much help when the numbers are coming in pretty good from there. But we're awaiting like any kind of news that might give us a little bit of shot in the arm to give us some direction. Of course, everyone's looking for this market to try to move higher. So we're looking for some indication that we can go there. Right now, we're priced pretty well right in this area. Now, the wheat did retreat some. I think that a corrective rebound is finally complete. We didn't realize it was going to come in just one day, but the futures have been, are controlled really by technical numbers and by the algorithms. I think if you look at it since mid-November, we had a low of $5, then we got up to a high of $5.90. The halfway back mark was about $5.45. This is now in the March contract. Of course, it did get down there, and in one fell swoop, we get right back up through the 65 and a half number to $5.70. Now we fulfilled that kind of retracement, and the market has started to come back. This just tells us it's very thin. A lot of participants on the sideline, and as the market starts to settle down, we expect that the fundamentals will really start to take hold, and that increase in the participation should steady the trade somewhat. And as other things start to come into the market, it'll give us a little bit better of an idea. But until then, the market still remains somewhat vulnerable, and I expect that there's still going to be a lot more volatility ahead.